have exciting news to share. Based off of a survey done by Realtor.com, more housing inventory should be expected in the next 6 months, which could dramatically change this next quarter of the real estate market. If a few key changes happen, we could see a different market for first-time home buyers that may give you a little leg up. So let's get right into it. The big headline is that according to a survey done by Realtor.com, more than 2/3 of potential 2022 sellers are expected to list their house by summer's end. Now, it's no secret that the late springtime going into summer has historically been a very, very active time in the real estate market for new inventory coming about. And this is largely because a lot of people will want to list their house right as we're approaching school getting out so that they can move their kids throughout the summer so they're not having to pull their kids out of school, especially if they're changing like school district. So Realtor.com conducted this online survey in February, and more than 6 in 10 prospective 2022 sellers said that they intend to put their homes on the market within the next 6 months, suggesting that we will have some upcoming relief to one of the worst housing shortages in history. Now, if we can get more inventory coming to the market, that is a great thing. But is this likely to completely overturn what's currently going on in our real estate market where there's tons of demand and low supply? Unfortunately, no. Because keep in mind that some of those sellers who will be listing their homes are also going to be buying a home and joining in with the mass amounts of buyers that are already fighting for houses. If you're looking to buy a house, you have most likely been keeping a very, very close eye on interest rates and how they have been rising like crazy. Now, in their press release, Realtor.com did say that whether the nearly 2/3 of potential sellers follow through with their plans to list in spring or summer will prove integral to buyers hoping to make a purchase before the interest rates inch up even higher. They went on to, in my opinion, make a great point that I really want you guys as home buyers to be cautious of. And it said, in a positive sign that homeowners are serious about listing, many sellers are already getting their home ready. However, they're doing so with great expectations of the current market, which means buyers should prepare for sellers asking for high offer prices, quick closes, waived contingencies, and more. So this is exciting, don't get me wrong. I am very encouraged about the possibility of lots more current homeowners listing their home for sale and having more available inventory for the buyers who are pushing through these raising interest rates and still hanging on to the wild ride that is the 2022 housing market. However, you have to keep in mind that it is still going to be tough. We're not going to have a surplus of homes available to where sellers are automatically going to be paying your closing costs and, bringing down their prices. We haven't hit that yet, and the market is not showing any signs that that's going to happen soon. But we may start to see a little bit of a drop in the number of multiple offer situations. And it may be a little bit easier to get under contract on something after some of you I know have been beat out for months on end. It's also worth talking about how this add of inventory and the higher interest rates could take a toll on the home appreciation rate. Home appreciation in February climbed 20% over the previous year. Now, this was the 12-month consecutively that had double-digit appreciation, which is just absolutely insane. CoreLogic's forecast suggests that home appreciation should finally hit its stride and potentially slow down to about 5% in the coming year, according to a news release from the company. And I won't go through all of the details, but it was a really interesting index to look through. They found that the highest year-over-year appreciation was in Naples, Florida, and overall in warm weather climates. Naples had an increase of 41% year-over-year growth, which is insane. That's honestly insane to think that you could have bought a house last year and just in that 1 year seen a 41% appreciation in value. All 4 metros, they went on to say, with the largest annual price gains in February were on Florida's Gulf Coast. And this is really making me think that I should call up my parents and inform them of this and just kind of rub it in their faces that they didn't hold on to the house that they used to have in Sarasota, Florida, which was right on the Gulf Coast, because it probably would be worth a lot more now than they sold it for back then. As a whole, Florida took the top spot for appreciation and came in at a 29.1% increase statewide. And this was followed closely by another warm weather state that I have lived in, Arizona, which came in at 28.6% growth, followed by Nevada in third place, which was 25.8% annual appreciation. So CoreLogic is tying this directly into what we talked about in the beginning of the video, which is inventory levels. They expect that the type of gains that we have seen in appreciation as well as pricing can slow down and potentially will level out at around 5% in the next 12 months. And the key shift to that happening will come with additional inventory. Frank Nothaft, who is the chief economist at CoreLogic, said, "New listings have not kept up with the large number of families looking to buy, leading to homes selling quickly and often above list price. This imbalance between an insufficient number of owners looking to sell relative to buyers searching for a home has led to the record appreciation of the past 12 months. Higher prices and mortgage rates erode buyer affordability and should dampen demand in coming months, leading to the moderation in price growth for the forecast." This is something that we also need to address, which is how the continued lack of inventory is continuing to be affected by the changing interest rates and how those have completely shifted how much people can afford in this market. Last month, I just put out a video titled "Mortgage Rates Continue to Hurt Home Buyers," and I talked about how they were slowly creeping up into like the high 3s, low 4s. Now we have interest rates in the 5s and 6s already, and that was just 1 month ago. So if you were kind of maxing out your pre-qualification and not really finding anything in your price point, and you were pre-approved or pre-qualified at that like 3.5% interest rate, odds are now your total pre-qualification amount is much lower, and it is going to be increasingly difficult to buy a house until we have an abundance of inventory and more sellers who are willing to sell their house for at least the list price, if not maybe a little bit less. Let me know what you guys think about all of this. Are you seeing signs in your market that we may have more inventory in the next 6 months? And are things starting to cool off? Or are you still trying to fight for a house and seeing lots and lots of multiple offer situations? I know in Central Arkansas, in our kind of entry-level price point of like $300,000 and below, we are still seeing like 20 plus offer situations. It is not a fun time for those buyers, but we are starting to see a cool off in some of our more mid-range price points. So I am hopeful that if this is true and we can start to see some more inventory hit the market as sellers approach the end of the school year and want to list for summer, maybe that will help bring the total amount of offers and bid wars down and give some ease to the first-time home buyers out there who are just trying to get a great place to live. I'm Nicole Nark, Arkansas real estate broker, with videos to help you find your way home, and I will see you in the next one.